Imagine you are at a busy marketplace. There are people selling fruits, vegetables, clothes, and even furniture. Now think of the stock market as a similar marketplace, but instead of fruits or clothes, people are buying and selling stocks, small pieces of companies. When you own a stock, it's like you own a teeny part of that company. But how do people know what to buy and how do prices change? Let's break it down. 1. What is a stock? Alright, let's start by understanding what a stock is. A stock is a like slice of a pizza, but instead of pizza, it's a company. When you buy a stock, you're basically buying ownership in that company. Let's say you buy a share of Apple. Now you are part of Apple, just like if you own a slice of pizza. Imagine Apple decides to release a new iPhone. People get excited and they think, hey, this is going to make Apple more money. More people buy Apple stock and the price goes up. That's how stocks can grow in value. But what if they release a phone that nobody likes? Well, people might sell their shares and the price could drop. It's all about demand and supply. If more people want to buy Apple stock, the price goes up. If more people want to sell, the price goes down. 2. The stock exchange, the store where stocks are bought and sold. Now, where do people buy and sell these stocks? That's where the stock exchange comes in. The stock exchange is like a digital store where buyers and sellers meet. It's a platform like a shopping mall where you can trade stocks. Think of it like eBay or Amazon, but instead of buying gadgets or clothes, you're buying teeny parts of big companies. The New York Stock Exchange and the Nasdaq are the two most famous exchanges in the world. They are like the biggest malls for stocks. There are hundreds of companies listed there: Tesla, Google, Coca Cola, and they are all buying, selling, and trading their slices of pie. 3. How prices change. The power of news. The stock market is not a guessing game. It's a reflection of what's happening in the real world. News is a huge factor in how stock prices move. Let's say Tesla announces it's launching a brand new electric car with amazing features. Investors hear about this and think, wow, this is going to make Tesla even more popular. As a result, more people rush to buy Tesla stocks and the price goes up. On the flip side, imagine if there is a bad news, like a company scandal or a product recall. Investors get scared and think this could hurt the company's reputation and future earnings. They start selling their stocks, causing the price to drop. News, whether good or bad, plays a massive role in shaping stock prices. 4. The risk factor, winning or losing money. You might think sounds easy. I just buy stocks when the price is low and sell when it's high, right? Well, that's the ideal scenario, but the stock market can be unpredictable. It's not all sunshine and rainbows. Imagine you buy shares of a company you believe in, like Blockbuster, before it went out of business, of course. You think it's a stock is going to go up, but then one day a new company called Netflix comes along, offering streaming services instead of DVDs. Suddenly, Blockbuster's stock crashes because people are buying Netflix instead. This shows the risk in stock market. There is always a chance you might lose money. That's why it's important to do your research and understand what you are buying. But here is the bright side. If you buy the right stocks at the right time, you can make a lot of money. Many people have become wealthy through smart stock investments over time. The key is to be patient and stay informed. 6. Why does it matter? So, why should we care about the stock market? Well, the stock market is an important part of our daily lives. Companies use it to raise money to grow their businesses. When people buy stock, they are helping companies develop new products, create jobs, and improve the economy. For individuals, the stock market is also a way to build wealth. Many people invest in stocks for retirement or to grow their savings. If you are smart about it, the stock market can help you reach your financial goals. Just remember, it's not about getting rich overnight. It's about patience, research, and making smart choices. So, next time you hear someone talking about the stock market, you will understand that it's not just numbers on a screen. It's a marketplace where people invest in companies, hoping they will grow and succeed. It's a place where risk and reward meet. And with the right knowledge, you can be part of it. And that is how the stock market works. It's like a busy market where people buy and sell small parts of big companies. The prices change based on demand, news, and the overall health of a business. Always remember, while the stock market can be risky, with smart decisions and research, it can also be a great way to build wealth over time. Thanks for listening and happy investing.